Hi, hello there. I'm Ross, the chairman of the Hive Business, and I'm really pleased to introduce David Abel of Vision Dental Wealth.
Thanks, Ross. Pleasure to be here.
Fantastic. So, David, hopefully people know what Hive do, but probably just to recap, we've got a large accountancy division. We do a huge amount of tax planning. We've got a business development section, so we're helping dental practices with their strategy, with growth, with improvement, maybe some exit planning. David, what does Vision Dental Wealth do?
Well, we're financial planners, so independent financial planners. So what we'll do is help people understand what their dream lifestyle is, really challenge them on that, try and build that with them, and then crunch the numbers to work out, well, actually, is that achievable and how do we get there?
Yep.
And then finally, we do what a regular IFA would do, which is, organise pensions.
Yep.
And that comes with a roadmap because it's quite overwhelming. There's normally a lot of stuff to do, similar to yourself when you take on a new accountancy client or tax planning client.
Yeah.
So it's about putting that roadmap in place so it's achievable and we can do it at a decent click.
Yeah. So we think it's amazing that we kind of get to work in collaboration. I definitely kind of perceive the world as becoming more complex, all the rules, all the regulations, the tax exposures going up. Kind of everything's getting more kind of difficult. So what do you see as the benefits of working closely with an accountancy firm, with a client?
I think there's definitely you've got two brains and two different perspectives, but I think there's multiple benefits. Time saving for the client. I mean, we've got clients that we look after together with Simon and Dan as well, where we'll do a lot of the legwork in the back and then present to the client, which they absolutely love because it means that we're saving them time.
Yeah.
And I think the different disciplines mean, we can rely on each other and we can use each other as a soundboard to think if actually their plan involves all of us. And it's really important that the tax, the business and the financial planning and investments, they all align and all the professional advisors know what the other are doing.
I believe you kind of hit one of the nails on the head there. There are good advisors to dentists, but the fragmentation, I think, is a major weakness at this kind of moment in time. So kind of using some of the analogies from, expert sports coaches, Clive Wood was a classic example, talks about the aggregation of marginal gains. Everything that we do within Hive and everything we do with Vision Dental Wealth is designed to get those small percentage points of advantage for a client, because those little percentage points can turn out quite beneficial, like disproportionately large to the contribution that goes in. What do you see from kind of client cases?
I think you're absolutely right. I think, just like with investments, you get compound interest. On the tax saving, it's compounds as well.
Yeah.
And that's really important and it's often overseen.
Yeah.
So making sure you've got those people that are fighting both sides of that is really important. I think the client experience improves because it's just easier. It's easier, that technical information, pulling reporting. People running a practice from an associate, they don't have time to be doing that.
Yeah.
So if you can outsource that and just spend time doing what you're good at, and also doing the things you want to do, with your family or whatever that looks like, that's a great outcome. I think that's where this collaboration really, really helps clients.
Yeah. What kind of process would you go through with a client, of Hives?
Great question. So initially there'd just be a chat and see if it's a good fit and see if we can help them.
Yeah.
Then we'll do similar to like a discovery call. It's like a fact finding, say what they're trying to achieve, what do they need help with, what do they think is important. And from that first consultation, we'll have a good idea if we can work together or not.
Yeah.
And from there, I'll put together a presentation and say, well, based on what you've told me, this is what I think we should be doing.
Yeah.
And this is the priority, because you'll know, like when you give business advice and you're consulting, there's lots of stuff to do, but usually it's the priorities, the big
triage.
Exactly, that make move the needle the furthest.
Yeah.
So that would be in the second meeting, and from there, if they did want to come on board, we'd basically take all of that financial burden away from them, challenge them, and make sure that they're doing what they're saying they're going to do. So an example is they've not updated their will, so they need to do that in a very basic form, and making sure you say, well, actually, you're going to get this done because we need to make sure the plan looks good, but we need to make sure the resilience is there as well for that financial resilience.
Yeah. I think there'd be, it's probably understandable people would say, well, you work on financial planning and we work on financial planning, not in a regulatory sense anyway, but what we're doing is trying to make the financial world of our kind of clients better. So I always think that kind of synthesis is going to get a better outcome. We've got visibility over our clients' financial position. Maybe they're running a limited company. Well, hopefully they're running a limited company because opens up massive opportunities. So we get financial visibility of what they're doing, the profitability they're making, the cash that they need for their kind of household, their tax position. We've naturally got kind of a huge amount of exposure to financial. So I see it as a massive benefit that we can kind of call on additional expertise to make that even better and kind of dovetail, whatever their plans might be, whether that's their investment thesis or protecting their business, probably a classic example. So I think there can be a common misunderstanding that, well, you're financial or we're financial and you only need kind of one or the other, but there's huge merit in the kind of overlap between what we do.
Yeah, definitely. And a great example would be, we've got quite a lot of clients that have got school fees, which you're helping them with in terms of the tax planning on how to draw benefits from draw money from their company to pay that.
Yeah, huge.
And then obviously there needs to be a plan on our side of how that's going to be paid back through investments, maybe pension or maybe ISAs or however that may be.
Yeah.
So I think that's a great example of where some complicated bits of planning can be looked after outside of the client conversations. Obviously they need to know what's going on and we'd inform them of that. But the real legwork and planning can be done accurately between the planners like myself, yourself and Simon.
We're taking on a huge number of kind of clients, certainly over the last 12, 24 months. And incorporation of a business is a common kind of thread that Simon and the tax team undertake. Again, there's kind of trigger points there as well, that when people are incorporating the business or maybe they're buying their practice, they've got a massive requirement at that point in time, haven't they? But sometimes people don't know what they don't know.
Yeah, it's a great point. And they've also been dealing with loads of moving parts on the way up to the purchase, dealing with brokers, learning about what they have to do. Even the basic commercial insurance, all of these things, a lot of them will be new. So stuff gets missed. And it's really important that when you're going through those transitions, buying a practice, selling a practice, moving from self-employed to incorporated, you make sure you cover your bases and you take those opportunities.
We think it's critical to kind of signpost, yes, we might be doing this for, planning and tax opportunistic reasons, but you do also need to kind of get your ducks in a row. You do need to make sure, you register appropriately with the FCA, but you do also need to make sure that you're properly covering yourself in insurance terms to, should anything untoward happen, then your family are okay and the bank borrowing is covered and, that, large £1 million practice that you might have purchased into is protected on the downside as well. And it's a bit negative, isn't it? But we do want to signpost those things.
Yeah, you want to plan for the worst, and I think
hope for the best.
Hope for the best. Exactly, that's it. And I always view it. You want to transfer that risk away from you and your family. Because if you've probably got a big liability, let's say take the example of buying a practice, you've probably got a big liability. If something happens to you, the business value is going to reduce dramatically. The share is going to pass to your family, and not only are they're dealing with potentially a missing father or missing parents, but they've also got a business which is probably got massive liability.
There's kind of no reason not to run it there, because we're talking about kind of protection insurances there. We're not talking about big bucks, are we? We can run them tax efficiently, so there's no reason not to. Is that fair? Or?
I think at least make an informed decision. At least know what your options are, and then if you've made that decision and saying, well, actually, I don't think that's a good use of money. Hopefully, I can convince you that it will be for the cost of it. Then you've made the informed decision. You've not gone in blindly. I think that's the main thing. And again, when it comes to the planning, that's when you can really make informed decisions, because you know what impact it's going to have. I've got clients that I've met that wanted to spend quite a bit of money when their kids were kind of 15, 16, 17, 18 while they're still at home. And their previous advisor didn't allow them or didn't show them that they could actually do that. And it's about sitting down and saying, well, you can do that. You're going to have to work a few extra years. How do you feel about that? absolutely fine. You know, I want to spend that time with my family making those experiences. Yeah, I think it is really important to make sure that you at least know your options.
Yeah, well, I mean, other than I'm a bit more dogmatic about the insurances, I think, you know, if you're younger, I understand you don't think about it quite so much. But when you're younger, the insurances are cheaper and you can run them, they'll be tax deductible through the company. I still think there's a huge amount of kind of merit there. But let's put that to one side. You know, are there ever situations where someone shouldn't work with a financial advisor or doesn't want to work with a financial advisor? You know, what are those kind of circumstances?
I think there's always value in sitting down, and if there's always value in having a conversation with an advisor or a planner, because if it's not a good fit, we'll let you know and we'll tell you why, and it might just be it's not the right time in terms of you know, our fees might erode the value of your investments, or it just might not be the right time. And if that's the case, then at least again you've explored that option. So I think I can't think of any opportunity, any times where it wouldn't be worth having a conversation with a planner.
Decision.
Yeah.
I mean, it's natural. We get clients who invest in any, you know, range of things, from cryptocurrency to, you know, fine wine, whiskey. You know, it scares me how much you can spend on a barrel of whiskey, but it does happen. You know, if someone sat there going, I absolutely want to invest in a buy-to-let, and that's my kind of belief system, that's kind of okay, isn't it? It's just, okay, maybe it's not the right time now.
Yeah, exactly. But I think, again, it goes back with the property. It's a really interesting point. It's making an informed decision and understanding what the tax liability on that is, what your net return's going to be, how much you're going to need for maintenance, understanding all of that before you make that decision. And it may be you still say, do you know what, that's what I think is the right thing to do. And that's absolutely fine. But again, it goes back to understanding, and again, you can help them out on the tax position. Especially thinking about what their future income is, what their mortgage payments are going to be. You know, it's not something that I invest in myself, property, just because it doesn't make sense for tax reasons.
Okay, let me kind of pick on that if that's okay, because I know some people are, you know, they absolutely have property, and you know, at the end of the day, people make the decisions they want to, and that's totally fine. So if you've got a choice, just arbitrarily, let's say you've got £100,000 to put into a buy-to-let property investment, you're absolutely right. Simon and the team will guide them in a really tax-efficient way to do that. But if there's £100,000 that they might invest into something in your world, what would be the kind of the comparable dynamics?
There'd be much less heavy lifting with our route, because we'd do that for you. But we'd invest in.
We'd have to get in and kind of refurb and paint the property
and potential issues with tenants and all the legal stuff which is changing from the latest government, which obviously has a big impact. It seems like it's only going one way. They don't seem to be friendly to landlords.
No.
I can't see that changing, really.
No.
But we would just invest the money in the best companies in the world. Diversified portfolio for growth over the long term. Of course, there's loads of things that we kind of need to caveat that with, and it would need to be suitable, and we need to talk about time frame. And there's a lot of other factors that go in. But if it was a long-term investment, that's probably where we would go, and utilising a pension allowance, ISA allowance, depending what the purpose of that money was for, would all be part of the planning process.
And of course, you get the kind of tax perk on the way in, which you don't get with property as well, do you?
With pensions you do, and I guess it depends where it's coming from. And the more we get into talking about this, more complicated it becomes. So I'm just conscious we're now potentially drifting into something where it could get more complicated than it needs to. The main thing is get someone that knows what they're doing and they can look after that for you.
Well, it's exactly the reason we kind of set this up, because, you know, if your objective is to maximise your wealth and your future potential and you know, work towards kind of retirement planning, this is where the overlap kind of comes in, isn't it? It's like trying to determine what's the best thing for the person involved or the family involved, and then kind of understanding what the pros and cons are with the tax position, and, well, not even just a tax position, just has someone got enough cash flow in their company to do what they say they want to do? Because there might be a choice of, okay, well, here's an opportunity to insert an extra surgery, and I've got to, you know, do a bit of building work and spend money on a new chair, and we know that's going to cost about £100,000. Sometimes I think people get kind of caught on this whirlwind of believing they've got to pursue business improvement, but it's not always the case, is it?
No, and I think that it's kind of hardwired into us, that growth mindset. which is positive.
Yeah.
But when we sit down with clients to map out and formalise a plan, we always talk about that personal vision, what they're looking for. Usually it will be financial independence and spending time with their children.
Yeah.
And that, a client recently that we've been dealing with, that was the case. They were looking at expanding and felt like it was the right thing to do, but were putting it off because I think deep down they realised it wasn't the right thing to do.
Yeah. And probably everyone else was saying it was the right thing to do.
Exactly. And they saw, his peers doing it as well.
Yeah.
And when we broke down to what he really wanted to do was spend time with his kids.
Yeah.
And they're 14 and 16, doing what he was going to do, expanding, taking on extra liability, building other surgeries, needing to take on more marketing, to fill that capacity.
Yeah.
That wasn't gonna meet that goal, and he knew that as soon as we started talking about it. Once we had that clear vision, it helps the decision making process.
It kind of swept along with other people's decisions and momentum and beliefs and power. Yeah, I can definitely see that, and I think that's a really nice way of kind of framing how you approach things, because context is kind of critical.
Yeah,
I think there's this belief that a dental practice is a dental practice. But of course, there's a wide variety of size and shapes and types of dental practices. But of course, there's different shapes and sizes and objectives of what the owners of the dental practice want. And that kind of cascades down. I think there's always a danger, and I love the way you approach it, of trying to understand what their objective is rather than, well, there's this kind of uniform approach to what you should do. You should be an associate, and then you should buy a dental practice. I think that's there's a big paradigm there in the industry.
Yeah.
We'll probably kind of expand and talk about associateship versus limited company another time. But there's this kind of almost kind of there's believed to be this kind of singular pathway through dentistry where you train yourself up, you become an associate. Of course, at some point you'll buy a practice, and of course at some point you'll put 3 extra surgeries on the side. But it's very much the opposite way around. You kind of start from the top and cascade down, don't you?
Yeah. And I think going back to the collaboration and why I think it's so great and great for the client is when we've got a situation where we've got a practice owner and we're looking at cash flow and we're talking about where we can go to get to that end goal of the plan. Yeah. There's more than just one way. So it might be we're sitting down with Dan and yourself, with the client, and they say, well, we've got a spare 10 grand a year to either invest in our marketing and grow or put into pension. What do you think is the best option? And we can then map that out together and say, you can say, well, actually, we've got a really strong case, good location. Yeah. We think it might be best to invest in the business at this moment of time. And that's where I think it's our real strength is working together and collaborating.
Well, I actually I'd love the scenario where if you've kind of got through, the diligent planning with your client and you kind of almost turn the spotlight back to us and say, actually, what we do need is we need to generate an extra 50k a year profit. Yeah. And therefore, we then know that we'll need X pounds of revenue, and therefore we need X number of new patients. That's really kind of valuable information to know of what we've got to hit as growth targets or improvement objectives in order to fill that kind of person's requirements. Yeah. So, really kind of turning around. Kind of understanding when you're sailing, I suppose, you can't just get in the boat and belt off across the tide as fast as you can.
You can.
You can, but you'll get to the destination if you take your bearing and then calibrate towards that. Yeah. And I do think a lot of time, I get it, the world's complicated, and the human being takes in approximately 2 terabytes of information every single day. So I get that it's complicated, but this is the bit you don't want to shortcut on. We need to know what our bearing is, life bearing, financial bearing, and then you can kind of build your kind of decisions and whatever it is you want to work on back from that kind of destination. Otherwise, you're just, you're off into the deep blue sea,
freestyling,
traveling as quick as you can. So there's a massive difference there, though, and that's why we're working together more and more. I can't see that kind of changing.
No, I can't, and I don't know of another firm that's doing what we do in terms of collaboration in so many different areas. Yeah. I just think it's great. The main people it's great for is the client and the experience. Yeah, I think.
Great. Thank you for sharing your perspectives today. We're probably only scratching the surface. So really welcome any kind of questions anyone's got. Thank you.
Cheers, thanks.